anticipated close to about 1 lakh crore less in the first half of the next financial year. That proves that there's that bit of positive spin on the bond side. Obviously, that also has implications on liquidity. What that points out is that the government is not going to suck out too much liquidity from the system because the system is already grappling with a lack of liquidity. So how banks will manage, of course, will depend on individual banks, but it seems that going ahead, the financial sector should have a bit of an easier time to tap the market for immediate liquidity. That's a big positive. Financials all looking strong. Of course, the RBI last evening came out with a special set of clarification saying that the AIF guidelines, which they announced in December, now they will apply with slightly less force. Banks can write back some provisions, so that's going to be a boost for Q4. As you said, confluence of factors, everything playing in at the same time, for sure.
Yeah, Vishy, just one quick thought on this as well. We've been, or rather, a lot of market sectors have been, impacted in a negative way because of regulatory action. Towards the end of the year, the first move, which is kind of slightly positive from a regulatory action from the Reserve Bank of India, and the borrowing calendar pointing towards what the yields are suggesting. Yeah. And now, it was a no-brainer that PSU banks would do well. Are people that you're talking to talking about the loan growth numbers for some of the PSU banking stocks or banking at large being reasonably strong enough, or are there doubts around that?
No. So at this point in time, at least with regard to the public sector banking system, there is still hope that at least for the next couple of quarters, things are going to look better than stable. That will likely sort of peter out over the course of the year, simply because base effect starts playing in. Over the last financial year, we've seen really high credit growth. So that, once that comes in, once that kicks in, then the base effect starts showing up in the second, third, fourth quarter. Things will start to look a little bit more normal. Having said that, private banks, by virtue of having a very high credit to deposit ratio, themselves will have to slow down on the credit there as well. So your big guns like HDFC Bank, ICICI, not ICICI so much, but HDFC, Axis, IDFC First, Kotak, all of these are big players in the credit market. All of them will have to at least slightly bring down their credit growth. So comparatively, public sector banks start looking better because they do not have that kind of baggage on their books. They have, all of them, most of them have deposits quite in excess of where their loan books are. So things will look better from a comparative point of view. Whether it's enough for the market to rejoice, that's something that I'll leave it to you to decide for that.
But fair point. Okay, Vishy, thanks for giving us that perspective as well. And as Vishwanath said, a confluence of factors really working beautifully for financials today. Rajesh mentioned that too. Rajesh, while we've spoken about banks at large, just one quick word on the PSU banks specifically. How good are the derivative positions or the charts? I mean, as we are wrapping up this series and this year, how do the charts and the derivative positions set us up for PSU banks in particular come April?
Definitely. So clear picture would come post rollover from the derivative perspective. But looking at the technical perspective, yes, SBI, Canara Bank, these two banks are looking promising from large PSU bank, and we believe that the kind of setup which we are observing on Canara Bank, and the stock is now holding about 20-day moving average. The way stock has recovered from its 50-day moving average, that clearly shows that now stock has potential to continue furthermore upside towards 620, 630 could be the possible target in the near term to short term basis for Canara Bank. So this stock is looking very promising, and one can buy and accumulate Canara Bank and keep stop loss of 555. Another bank, that is SBI. Though there is still, momentum is still not there in SBI in terms of price action, but looking at the overall longer term time frame, stock is bullish and holding the ground at a higher level. The way stock has recovered in today's session, that clearly shows that now short covering is taking place. Once stock crosses above 765, 768 kind of zone, then possibly this short covering can extend, and then we can see SBI to move further higher towards 790 to 810 kind of level on the higher side. So I think most of the PSU banks have corrected in last couple of weeks, and now taken the support from their important support area of 50-day or 20-day moving average, now showing the recovery. So I think the same kind of behavior across the PSU bank, and we believe that SBI and Canara Bank are looking attractive from large PSU bank. And if we go on the smaller PSU bank, so I think Bank of India, that stock is looking very promising. The way stock is holding the long-term breakout on a monthly chart, that clearly shows that Bank of India can again start railing. And once stock crosses above 140 kind of level, then possible really we can see towards 155 to 160 for Bank of India. So that stock is also looking promising after this corrective move. One can buy this stock with stop loss of 133.
Okay, Rajesh, Sion, so much more to talk about. We'll take a quick break. We'll try and get you a global perspective on all that's happened across the world and India as well on the other side of this very quick break. Stay tuned. Back with Indian market close right here on NDTV Profit. Indian markets are done well. S&P 500 has notched in a stellar 10% up move for the quarter as well. I mean, unless something really dramatic happens today. So equity markets per se are doing very well. Jonathan Schizell, Deputy CIO of Westminster Asset Management, joins us right now on the show with his thoughts on all that's happening around. Jonathan, great having you. Good morning to you. Thanks for joining in. What do you make of this uptick that select equity markets, there is US, there is South Korea, there is Japan, and there is India, are having currently?
Yeah, good morning. Yeah, look, it's obviously there is, a lot of people always think we're coming into the end of the first quarter. There might be a little bit of window dressing going on, but clearly we have a number of markets that are at or hitting new all-time highs, equity markets, that is. So, clearly markets are still in a bullish mode, and it wasn't, I think we have to not forget it wasn't that long ago where I think most economists were predicting the US would fall into a recession and people were concerned about equities, and I think a lot of people sold down equities, and I think what we're seeing now is a bit of a reversal of that, and people are trying to sort of up their equity weights as they think the chances of a recession clearly have lessened somewhat.
Jonathan, the US markets, because of what's happening to the tech stocks, is doing well. You can argue that some bit of it is playing out in South Korea as well. What about markets like Japan, which have shown such a steady rally? There is a bit of a policy normalization that is starting to happen, if you will. Are there more upsides for some of those Asian markets?
Yeah, I think you're right. I think Japan has some very specific factors at play. I mean, you've got the Nikkei in Japan, which has a slightly higher tech weighting, so a bit like more, a bit more like the Nasdaq versus the S&P. You've got the Nikkei with a higher tech weighting. You've got a number of tech stocks which have driven that market higher, and then you have the Topics index, which is a broader index like the S&P in the US. And the Topics index is a bit more domestically focused, a lot more financials, and those financials have been seen to be a beneficiary of rising interest rates in Japan, and so they've done very well as well. I think India and Japan have a number of similarities. Both those markets, you have actually seen quite a broad-based rally, so breadth has been pretty good. Yes, there's sell-offs from time to time, but I think India and Japan have seen good breadth, which was something we've missed, particularly in US markets, as you rightly point out, which has been led by relatively few very large tech stocks. But I think overall, Asian markets still look pretty good value when we compare them certainly to the US markets.
Okay. And Jonathan, and therefore by that breadth, India, I mean, it's an end of a financial year for us. We kind of follow the April to March calendar. And we are ending this financial year on a very high note. The markets have done really well today. What's your sense? I mean, forever the talk about higher valuations, but we're entering another earnings season as well and the election season. How comfortable, uncomfortable are you with positions in India, valuations in India and more?
Yeah, look, I think, the reality is, I've been investing in India for many, many decades. And if I'd listened to most of the people worrying about valuations, I would never have entered that market in the first place. I think we all know India trades so-called expensively compared to other emerging markets and most other markets, but yet the fact is performed extraordinarily well over time. And ultimately, that's down to the plethora of very good compounding type growth companies that India offers investors across multiple sectors. And I think, India, the reality is markets don't fall because of high valuations. You need a separate catalyst, and then, high valuations can come back to bite you later on. But, traditionally, markets haven't started selling off just because of valuations alone. It's needed some other catalyst. And I think clearly, certainly from a foreign investor perspective, I think expectations are that Prime Minister Modi will get his next term, and therefore we'll see more of the same, and therefore, Indian equity markets can still, move higher. Clearly also, just not to drag this point here, but clearly also we have another factor at play, which is China. And, with Chinese markets still looking difficult, a lot of investors still not interested in that market. What that does is focus more attention on the likes of India. So I think, and then that factor is unlikely to sort of dissipate in the near term. So I think that's also supportive of Indian equities.
I think that's a very good point because Chinese markets have erased the momentum that they had probably started to build as well. Jonathan, just one last question before we thank you. I mean, because you've been invested in India for so many years, and we've been talking for so many years as well, what is the current set of favorites, if you will, in terms of themes? Because the clutch of themes out there in India right now, which different people are liking in a different fashion.
Yeah, I mean, the reality is as we all know, foreign investors play in a fairly small pool. They tend to stick to the larger stuff. And actually, when you look at global funds, they might only have a couple of positions, if at all, in India. And I think, one of the best ways of playing India remains financials. You were just highlighting financials before I came on air. Indian banks, that clearly private sector banks in particular, gives you access to a broad number of sectors through buying a financial. And it plays into a lot of the growth story that India can offer investors. So we continue to like Indian financials as one area. And obviously other areas would include the CapEx side, the capital expenditure beneficiaries as well. But broadly speaking, probably, foreign investors do, if they'll own anything in India, they'll probably own one of the private banks.
Fair call. And Jonathan, appreciate that. Appreciate that thought. And thanks so much for taking the time out and speaking to us today on NDTV Profit.
Thank you.
Well, that's the view from Jonathan Shizel. And, that statement was very nice, that he's been investing in India for so many years. If he had heard people all through the years talk about how expensive India was, and India has traditionally remained expensive, he may not have made the money that he would have made by investing in India. I think it's a telling statement of sorts. So that's the FI view too out there on a day when the markets have done so well. Now, before we go back to Rajesh, let me get in my colleague Varsha, who joins in on a buzzing day to talk about some of the key stocks that are buzzing, but are buzzing on the back of high volumes. Varsha, good afternoon.
Good afternoon, Niraj. So yeah, few of the stocks that are buzzing as of today is starting with VIP Industries, wherein stocks on intraday high of 14%. Now there's a note on VIP Industries by Nuvama, which has maintained hold with a target price of 517. Now the key highlights of this note are VIP is launching products to move towards the premium category, and they are eyeing a revenue CAGR of 15 to 20% for the next 3 to 5 years, and margins are likely to improve to 14 to 15%. Then we have Century Textiles and Industries, where stocks are an intraday high of 12%. Now this stock is up for second consecutive session. Yesterday also the stock rose almost 4%. Then we have Aegis Logistics, wherein volumes, if you see, are over 9x. It's 30-day average, and stock did see intraday high of 13%. If one has to look at the future outlook for this company, they're doing a capex of 1,700 crores on their logistics and storing services for its chemical and petrochemical products. Also, they've maintained their guidance of growth of 20 to 25% for FY24, and they expect 15 to 20% of EBITDA generation on 4,500 crore of capex over FY22 and 27. Lastly, we have Dilip Bilcon, wherein there is an expectation that there will be hike in toll charges for Bangalore-Mysore highway between 3 to 14%. This may be the reason that stock is up almost 10%. Although on 18th March, company received orders worth rupees 413 crore. It's a JV contract from Madhya Pradesh for irrigation project. But do note that this needs to be completed in next 4 years. So these are all the buzzing stocks as of now.
Okay, thanks a lot for that. And Rajesh, can I take it to you? 3 or 4 of these names, Century Textiles, VIP, how do they look on the charts?
So first I'll take on Century Textile, and as a disclaimer, this stock we have already recommended to our client in morning itself, and our targets are 1750 to 1800 on a positional perspective for Century Textile. The way stock managed to give breakout on a weekly chart, a contracting triangle breakout is happened on the weekly chart. That breakout is clearly indicating that now if stocks holds above 1560, then possible upside target we could see towards 1700 to 1750 in the continuation of this up move. So I think Century Textile one can hold on, and I think if you get any dip, minor dip, can be used as a opportunity to again add the stock. Again, if we talk about the VIP, yes, very strong buying interest in today's session, though stock was in downtrend. And looking at the short to medium term structure, still stock is trading below to their important moving averages. But the kind of momentum which we are seeing in today's session, stock has now comfortably holding about to 510 level. So that level needs to keep as a stop loss. 510 should be your stop loss to hold the position. And looking at the near term structure, we believe that this further follow-up buying action we can see in the coming session, and 550, 560 could be the immediate target for VIP industry. DBL, yes, there is again momentum is taking place. Stock is now approaching to its multiple supply zone area. After a long consolidation, I think if its stocks manages to cross above 560, 465, then possible extended rally we can see towards 480, 490 also for Dilip Bilcon. So I think these 3 stocks are looking promising. Our preferred choice would be Century Textile, then Dilip Bilcon.
Okay. So, Century Textiles is amongst the top calls that have been given by Rajesh to their clients already. One call that might have been difficult to take because the stock started on 19% higher, though did dip intraday, but is now locked again on a 20% circuit, is Goel Corporation. Like I said, upper circuit today on the back of an asset sale. My colleague Anushi joins in to put the news into perspective. Anushi, good afternoon.
Afternoon, Niraj. So now if you have to look at Goel Corporation, quite a field day. It has had over a 20% gain as of today. Now this is on the back of the news of its land monetization in Hyderabad, which pertains to its signing an MOU with Squarespace Infracity Private Limited. This land monetization pertains to about 264 acres of land situated at Hyderabad, and the consideration for the same is estimated at about 3,400 crore. Now, if you have to take this in context with the company's market cap, that stands at about 2,200 crore, quite a significant sort of land monetization size that we are looking at. Again, this monetization period for the same is in the range of 18 months. So over here, with the signing of this MOU, the company is to receive about 520 crore as of the signing date. Now, what's happened today is, if you have to look at the volumes as well for the company, that is about 30 times its 20-day average, and the stock performance as seen about 20% today. But if you have to look at the backside also over certain periods, 1 month the stock did see about a 7.4% downside, while in the 6 months it has clocked in about 8% gains, and in 1 year about a 59% of a return over the time. So this is all that has been building on Goel Corporation as of today.
Okay, Anushi, thanks so much for putting that into perspective. That stock is up 20%, but the markets have done so well. It's just a special time to get in a really special guest for a very quick perspective. Mihir Vora of Trust Mutual Fund joins us right now on the show. Mihir, thank you for accepting to talk to us. I know it was very last minute, but really appreciate. It's just the kind of a move that has happened on the last day of the financial year that prompts us to do this. How constructive or not constructive are you, Mihir, into the next couple of quarters, considering that we are ending the year on a high, but we are also entering a very, very busy calendar over the next 2 or 3 months?
Hi, good afternoon, Niraj. Always a pleasure.
Thank you.
I am traveling and on the road, but the markets are keeping us all very engrossed,
Yeah.
and no complaints on that.
Most certainly, yeah.
Yeah. Niraj, I think it's also a function of the fact that there are global tailwinds, and growth in the global economy has been better than expected. So you do see even the U.S. markets buoyant, almost new highs in a lot of the segments, and that I think ex-China, I think the situation is turning into a risk-on kind of a mode, and India is part of that, I think.
Actually, Mihir, I was going to ask you that, because you look at this cross-market, cross-asset classes, cross-currency linkages so well. China, for all the fanfare that people had at the start of the year, and I'm not saying they were wrong, for a while the market did well, but then it's given off as well. Does that take away one key option for emerging market investors? Part one of my question is that, but part two is also this. A lot of people say that for EMs as an asset class to get money, China needs to do well. If China is not doing well, does this mean that foreign flows into other emerging markets like India will also be subdued?
No, I think in the last 3 years, this trend of EM ex-China is picking up, and I read a recent couple of articles also where we actually see acceleration of flows into global funds ex-China. So given the geopolitical and other uncertainty regarding the status of China, openness, etc., and the fact that, of course, China is still not picking up as expected, probably we are seeing a de-linking of China from the rest of the emerging markets, and India being the largest one seems to be the natural beneficiary. Though, as a caveat, we should not get euphoric, because it's not like we are seeing big inflows from FIIs because of that yet. But I think once a trend starts, and if it becomes a longer-term trend, then we can see disproportionate amount of money in the coming few years. So I'm positive on this trend, though we are not yet seeing that translate to FII numbers.
Got it. Me, the other aspect is, and you would have, I may not have seen a tweet from you, but you have some strong thoughts here, I'm sure, which is the borrowing program announced yesterday by the government, much lower than anticipated in surveys. The yields have reacted duly. Is this a one-day positive, or do you believe that there will be some more positive implications of what the government has announced last night?
So I think like in the budget, the government seems to be far more constructive on the growth, nominal GDP growth rate, and which basically means that they are expecting buoyant tax collections and robust profits and income rises. And that's the reason why I think they are able to be comfortable as far as the borrowing numbers are concerned. And these numbers can always be revised, but by default, I think the government seems to be sanguine about growth prospects for FY25.
Okay. Me last question. How do you pencil in what could happen to earnings over the next 1 or 2 quarters or maybe 3 quarters, considering that some of the commodity costs have in some fashion come back? Because for the markets to stay atop the mountain that they are standing at, the earnings growth will need to chip in. Are you a bit, worried about that aspect, or are you sanguine about it?
I think commodity prices have crept up, no doubt. But since we discussed that China is still not picked up, and China is by default the largest commodity consumer for most of the segments, I don't think we are still in an alarming zone as far as commodity inputs are concerned. I'd be more concerned about the pickup in the rural and the lower income segment categories, because the K-shape still seems to be around, and while the predictions are good for a good monsoon this year, we are keeping our fingers crossed, and I do hope that the K-shape becomes more even.
Sorry, this is my final question. We've taken 5 minutes of your time. Just one more question, and it is this. A lot of people off late have come in and cited some telltale signs which make them believe that the markets may quote-unquote crash. I mean, promoter selling or PE fund selling of companies in a big way, large blocks happening, valuations looking slightly expensive, and everybody says when typically all of these things happen, the markets tend to correct quite swiftly. Do you echo that view because of those signposts, or is your view different?
So the markets can correct sharply or crash, as you mentioned, only if there is indiscriminate selling. So far, the selling is in the form of QIPs or follow-up offerings or exits through IPOs and block deals, which is more organized and planned out. So it's not like these people or funds or promoters are desperate to sell. But since valuations have reached a certain level, obviously there will be some encashment. So I don't think it's like a desperate selling or anything like that. People are price sensitive, and as long as that's the situation, we should be fine, given the fact that the structural domestic inflows that we talked about, the SIPs and the pension flows and the insurance flows, those continue. So it's, I think, part of life, I would say, especially when the markets have done so well for so long.
Got it. Mihir Vora, really appreciate you joining us today on an important afternoon, I might add. Thanks so much for taking the time out. That's the view from Trust Mutual Fund. Not too perturbed about the quantum of block deals and sales that have happened. And that's the view from Mihir Vora. As we take that break, though, keep in mind that the markets have cooled off a little bit, and pretty swiftly, I might add, from 1.65 to 1.11. Actually, Rajesh, can I quickly get you in for a question before we take that break? This last 10-15 minutes, this very swift pullback, unnerving, or do you think it's okay?
So this is a normal behavior on expiry days. A lot of rollover activity is still pending. So I think that effect is going to take place, and little volatility is likely to be there for next couple of, this for half an hour. So I think this half an hour is going to be volatile, as most of the trades are going to roll over in the last half an hour of trade. So I think that is a new normal behavior for the expiry day. I think still we are holding 22,300. So I think there is no as such worry in terms of trend of Nifty. So that level needs to watch whether we able to close above that level or not. Until 22,300 is intact, there is no worry in terms of trend of Nifty for going forward.
Okay, Rajesh, stay on. Lots more to talk about. We'll take a quick break. We're talking about derivatives on the other side. Agam joins in to put the derivative picture into perspective on this expiry day. We also get in Sunny Agarwal to talk about some stocks fundamentally. Stay tuned, viewers. welcome back, of course, viewers. Private banks seem to be giving it up. You look at what's happened to Kotak Bank, maybe HDFC Bank, maybe some others. Look at the Nifty private bank chart. Just come off completely and flattened out. So much as there was a lot of fanfare around how well the markets were doing, just come off. For somebody who can put that into perspective very, very well is my colleague Agam. And Agam, on an expiry day, volatility is always anticipated, but just on the last day of the financial year, maybe there is some method to this madness.
No, this one is probably going to beat me, Niraj, because the last, 10 odd minutes have been, quite something, considering the kind of sharp fall that we've seen in the markets. But, I'm not going to hazard any guesses. I'm just going to tell you how things have shaped up right now. So the Nifty at the moment has lost 1% in the last, I would say 10 odd minutes, and it has moved from the mark of 22,500 to all the way down to around 22,274, as you can see here. Rollovers have picked up substantially, and I reckon that this number will move over the mark of 60%. But it is the intraday chart, and the sharp fall and on huge volumes is perhaps what is going to take a lot of traders by surprise. But let's move on and talk about the Bank Nifty, because that's where the real correction has come from day's highs as well. The Bank Nifty also was up around 1.5% at one point in time, and now it is standing at gains of just about 0.5% and losing out. And in fact, the 47,000 mark again in danger. Sure, the April series is adding, but the addition here is not as high as what we had seen earlier in the day. Options markets are going to be a completely different picture for the Nifty, and in terms of change, as one might expect, considering we are sharply coming off from the levels of 22,400, 22,500, is the reason why we have seen a little more in terms of call writing coming through. A lot of these traders who have written the 22,300 and 22,400 puts, they are now trapped as we speak, which means that they will be forced out of their positions in the next few minutes. And of course, this is your overall distribution. I reckon that at this point in time, it becomes a little less relevant, considering we are just in the last 15-20 minutes of trade. Let's move on and talk about a handful of other factors. We are keeping an eye on some longs in Cipla and HPCL as we move into a new financial year. Persistent Systems and SAIL, along with Chambal Fertilizers, looking at some amount of shorts, and that's how we have it. So the picture in the markets has certainly changed and become mixed, and that sharp reaction in the large caps in the last 15-20 odd minutes is potentially the reason why we are seeing a little bit of a come off when it comes to the benchmarks.
Agam, thanks for putting that into perspective. But clearly, the last few minutes, and bring up the Nifty yet again, just the intraday of the Nifty if we can, just to show you how sharp this pullback has been. Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities, with us on the show as well. Sunny, good afternoon. Very, very interesting gains in the better part of the trading day today. Before we've come off a little bit, are you constructive as we enter the earnings season? What pockets are you looking at, Sunny?
Yeah, good afternoon, Niraj. First of all, good to see that market is ending on green note in the Holy Week, especially on the last trading day of the fiscal year. Coming to the earnings season, I think the sector to look out for the upcoming earnings season is auto and auto ancillary, wherein I feel that the way volume numbers are shaping up in the two-wheeler and passenger vehicle segment, so those companies will continue to report a healthy set of numbers for the March quarter. And hence all the auto ancillary companies which are predominantly supplying to two-wheeler and passenger vehicle segment, those will be the companies where we will see a healthy earning growth. The second sector where I feel the numbers will be good is the port sector. So companies like Adani Port, JSW Infrastructure, or for that matter, Gujarat Pipavav Port, all these companies, I again feel, looking at the robust volume growth which we are seeing on month-on-month basis, these companies will continue to report a decent set of number. I think in addition to that, I think we will begin with an IT sector. So few sectors which I feel will be more of a in line with expectation number will be kind of IT and banking, where we all know that both these sectors are grappling with their individual issues. So IT sector struggling with the discretionary demand environment. And at the same time, banking sector, we all know that the net interest margin will continue to remain under pressure. At the same time, because of the regulatory action, we will see some slowdown in the growth in certain pocket as far as banking sector is concerned. Cement and FMCG, I feel cement, we all know that during the last 2-3 months, we have seen a multiple price cut, especially in the southern market. So cement may slightly disappoint on a margin front. So again, kind of neutral view as far as cement sector is concerned. FMCG, I feel the story is that urban market premiumization story continue to do well. If somebody want to ride a consumption story, maybe travel and tourism is a place to be in, wherein I feel again the numbers will continue to remain robust as far as travel and tourism sector is concerned.
Got it. Okay, Sunny, PSU banks have done very well today, presumably on account of the yield movement. Do you have a favorite out there? Do you like the space?
Yeah, so again, so PSU, within PSU, I would like to go with a larger name like Bank of Baroda, Indian Bank, Union Bank, and Canara Bank. I still feel that there is a valuation catch-up yet to happen along with the private sector bank. So it is recommended to stay with a larger size bank which have got a capability to mobilize low-cost deposit and at the same time protect their net interest margin over the period of next 2 to 3 quarters.
Okay. Rajesh, I know you said that this is normal on a given expiry day, but I'm still tempted to ask you, this pullback that we're seeing in banks now, would you shy away from taking any positions in the private banks, or would you take a position at the current levels when some of the stocks have pulled back quite swiftly?
If you analyze the whole private bank space, there is a mixed kind of behavior in private bank at this moment. So some of the banks are looking attractive on a technical front. First one is ICICI Bank. That stock is almost trading near to all-time high trajectory. So I think that trade on the long side we would carry. There is no as such major supply pressure or any dent on the near-term structure for ICICI Bank. And we believe that, if stocks continues to hold about 1060, 1070 kind of zone, then possibly stock may have potential to regain again its all-time high trajectory. So from a private bank, ICICI Bank is our preferred choice at this moment. And another stock from private sector bank, that is IndusInd Bank. That stock is also showing good recovery from its recent low, and stock has almost formed a bottom at around 1500, 1490 kind of zone. And since last 7-8 weeks, stock is holding those level. Even in last 2-3 trading session, we have seen a significant recovery in the IndusInd Bank also. Though on the higher side, 1570 is the immediate supply zone. And we believe that the kind of recovery which we are seeing on a weekly as well as on the daily chart, stock has potential to give breakout above 1570, 75 zone. And once this happen, then possible really we can see towards 1630, 1640 for IndusInd Bank. So again, these two banks from the private banking space is looking attractive.
Okay, well, more voices. We spoke to Helios Capital Samir Arora today, who shared his rather grim outlook on the tech sector, IT services in particular. Listen in.
I have been zero weight since 2022 July and underweight since Jan 22. And all my life before that, I have been overweight IT and even ran a big IT fund, even in India, one in Asia. So I don't know whether it is dead or not, but it is not doing well. And the issues are more than just what happened this month and that month kind of thing. It is a serious issue. But broadly, I always believed that the Indian IT companies do not properly guide. And I saw that many times in my life. So I don't listen to them or ask them what it is. I draw my conclusions from the big picture in this case. And the big picture is against IT. And so there are many reasons for that. First is that these Indian IT guys are not hiring themselves. They are not even having the decency to honor on-campus recruitment. I mean, how much more signal do you want?
Well, that's some answer on technology, hence why Samir has, or Helios has a mere 2.5% weightage on IT. But it's also about the year FY24. And as we wrap up this year, my colleagues would be joining in to tell us how have the markets performed. Actually, you know what, because it's 3:20, before we get to that piece, can we just quickly, as we do it daily, take in the closing strategies from experts. So Rajesh, you've given us a lot of ideas, but one quick idea, one top closing strategy.
So I think I would go with pharma space, and Aurobindo Pharma is looking promising. The way stock recovering, I think that stock can be buy as a BTST trade. Upside target we can see towards 1120 to 1130. Keep your stop loss at around 1175. 1075. So.
Oh, okay, stop at 1075, of course. Yeah, point well taken. So that's Rajesh's view. Sunny, one key idea for FY25, something that people can look at. They need not buy it tomorrow or day after, but one they can study and then take a call whenever.
Again, Niraj, I would like to bet my money on auto sector because we all know next week auto numbers will be pouring in for the month of March, and at the same time the numbers are going to be good. So I think Mahindra and Eicher Motor, these are the two bets which I would like to take for FY25 with an return expectation of 15% plus over the period of next 6 to 12 months.
Mm-hmm. Okay, point well taken, gentlemen. As we wrap up FY24, like I said, my colleague Puneet is here to tell us how the markets performed in the last financial year and some specific details. Puneet, take it away.
Yeah, thanks for that. And as we come into an end of this financial year, let's look at one of the key movements in stocks as well as sectors as we look at here. Now, for Sensex specifically, we've seen a 28% stock outperformance, while for Nifty, we've seen a 32% stock outperformance. But within that, what have the sectors been that have rallied? One of the key ones is realty. We've seen a 100% move in the sector. We've seen stocks like DLF, Brigade, which have done really, really well for the sector itself and for its investors. We've seen the defense theme again taking the baton. It's done so well this year after the last couple of years have been very well for the industry. PSC, the public sector enterprises have followed up very well. Moving on, we see that the sectors have done very well, but when we look at the mid cap and the small cap performance, that has really taken it away. Up 61 and 69. This is index which has moved upwards of 60%. And when we compare it to Sensex is just up 30%. You would be happy to be a Sensex investor in the Nifty and the Sensex, but when you look at these returns, as I said, just 28 and 32 when compared to 60% of returns in the small cap and the mid cap. Moving on, when we look at the Nifty 50 winners, which stocks? It has been the auto pack which has taken the baton. Tata Motors, one of the key winners of the last year. We've seen the news flow recently of the demerger of the commercial and the passenger vehicles. Bajaj Auto, again, one of the key stock. Rajiv Bajaj said that he sees the fair value at 12,000 rupees. With a buyback recently concluded at 10,000, the stock has just moved upwards of 100%. Adani Ports has continued India's biggest port maker and has seen 100%. It's recently acquired Gopalpur Ports in the East India as well and has done really well. While we look at the losers, UPL is the top one. Earnings have been dismal. They've also had a demerger, but the market has not had it. Earnings have not supported it. HUL, rural demand has been weak. FMCG demand hasn't come back, and with HDFC Bank also coming under a NIM compression. We move forward to the mid-cap 150 winners, and clearly Oracle, nobody would have thought that this company would be at the top, but the earnings have been really phenomenal. 69% growth in its net profit, while we look at the others, Oil India and Prestige, taking forward the realty sector again. While we look at the losers for mid 150, all eyes on Paytm. RBI has come down heavily on the company. Z is another one with the failed merger of Sony, and Rajesh Exports hasn't done well itself. Moving on finally to the small cap index, where everybody has had their eye on. BSE has had 400%, roughly 500% gains. Suzlon has been the other one, up from 8 rupees in October 22 all the way to 40 rupees right now. Hutco has been another gainer, up 300% for this one. And finally, to end the segment, look at the small cap losers, which we'll have on screen. Delta Corp, we've seen the changes in the industry that has happened. Campus Active, the demand hasn't flown. And finally, on Sharda Cropchem, stock is down 34% for the year. Back to you.
Thanks, Puneet. Well, some interesting gainers, some interesting losers. And you know, the stocks which have gained the most in FY24, amongst others, on the BSE 500, for example, we've had a power ancillary in Suzlon, we've had a rail wagon manufacturing company in Jupiter Wagons, MRPL, Cochin Shipyard. So Puneet puts a lot of these things into perspective. Sunny, I was looking at the stocks which have had a really good run and where people are still constructive. So one of them comes out to be Suzlon Energy, up 444% thus far. The consensus target price is about 50, which is about a 25% upside there. Do you like this power ancillary name? Have you looked at Suzlon recently?
Yeah, so on Suzlon, I think there is a strong tailwind as far as industry growth is concerned. So on renewable wind energy side, I think the company is doing pretty well. But having said that, what has happened is that stock price has run ahead of the execution. So maybe as we all know, as the executions and our numbers start coming for FY25, then I would like to bet my money on Suzlon. As of now, I would like to take a kind of neutral view on Suzlon because I think the street is discounting FY26 number already in the price. So let us wait how the execution pan out, and then probably a quarter or two down the line we can take a bet on renewable energy plays like Suzlon.
Okay. Point well taken. And Rajesh, one final word. And while we've spoken at length about stocks which have gained in the session today, just a word on some stocks which have come off in the session today. And I'm actually talking about some of the larger names, not necessarily just the smallest of names, but there is weakness in Torrent Power after days and days of an uptick. What do you make of the moves here?
Yeah, so stock has shown a significant corrective move, but overall structure for Torrent Power is still bullish. So I think this correction can get support around 1340, 1330 kind of zone. That's the immediate support area in this decline. So I think another 2-3% kind of dip could be used as again buying opportunity. As we discussed that again Nifty is now moved back to 22,300 above 22,300 level. So that needs to watch in the coming session also. 22,300 if it continues to hold, then this rally can extend as we discuss in this show itself. So I think one can remain on the long side of trade, as overall closing for this series is looking on a promising note. Most of the stocks were beaten down, now has shown some recovery. Short covering is already played in most of the stocks. So I think another follow-up buying action on the first day of April series could take April series further higher, and we could reach to new all-time high trajectory also in the April series itself. So next day would be very interesting to watch on the market perspective, whether this rally extend or not.
Okay, we'll see it next week, Rajesh, hopefully when we see you on the morning shows. But both of you, thank you so much for taking the time out and being with us, Sunny and Rajesh. Have a great Easter weekend, and let's start wrapping up the markets. About a minute left, and you have to admit that while it was a very beautiful trending chart, the Nifty chart will come up on your screen, the levels will come up on your screen. We've seen a really sharp pullback in the last few minutes of trade. Still, a 1% number, I would have been normally heartened by it. It's just that I've seen the 1.7% gain today, and therefore this seems a bit of a far cry from the intraday highs. I guess for the mid caps and the small cap indices as well, you'll probably see a similar thing wherein the index did come off from the highs of the day to somewhere here. Similarly for the small cap space as well. Bring up the Nifty 50 heat map and then the Nifty 50 point contributions. Still a fair degree of green, about 6 or 7 stocks in the red, but just that the quantum of gains have come off. So Bajaj Finserv was up about 5 odd percent, it's now up 4%. Bajaj Finance was up 4%, it's just about 3%. Some of the auto names, Hero, Eicher, etc. have done well. Mind you, the two-wheeler sales are expected to be strong. CV sales and passenger vehicle sales are not expected to be strong. Maybe that is what is playing out. But this is how the index has ended, and this is how the markets have ended. Just wrap up with the weightages to just show how the likes of HDFC Bank and others Actually, HDFC Bank has moved out from that list. It's ICICI Bank and SBI, and the others include an L&T, which have done really well. And this is despite Reliance Industries putting a little bit of pressure. So strong day per se, even if we ended off from the highs of the day. A strong year, you would admit, and I'm sure nobody's waiting for an encore of FY24 for FY25. But even if we get some semblance of that, I think it will be very, very welcome. To all the viewers, thank you so much for watching. But stay tuned to NDTV Profit for more news and updates.